One of the areas of the market that has been very reactive to bond yields, of course, has been tech stocks. We've talked a lot about that. But so too have SPACs, those blank check companies that have been having such a boom. And apparently the SEC is taking, or I should say reportedly the SEC is taking another look at those SPACs. That's according to a report from Reuters this morning, which says the Securities and Exchange Commission is sort of scrutinizing the boom that we have seen in SPACs and figuring out if there is anything that should be addressed from a regulatory standpoint, looking for information on how underwriters are managing the risks involved. Again, this is according to a report from Reuters. Brian Sozzi, as we've talked about, the hallmark of a SPAC is that it can make pretty much any prediction it wants. It can make forward-looking predictions in a way that companies that are doing IPOs have not. But you could say the chickens have come home to roost a little bit with these SPACs on their own. The market forces have sort of been taking care of it, because SPACs have not been doing well as of late.
Right, Julie. And where's the SEC been? Have they been paying attention to the past 6 months? I encourage them to watch Yahoo Finance Live every day. But listen, I'm not shocked. And I wrote 3 reasons why the SEC could finally be sniffing around these SPACs. One, wild projections. We've talked to a lot of these companies and we've pressed them hard. Why are you putting out these lofty projections till 2025? In some cases, companies coming out and saying, we're not making any money today, we're not making any money tomorrow, we're not going to make any money in 2023, but you know what? We're going to have $30 billion in operating profits by 2030. So wild projections are something here that I think is going to get a lot of these SPACs into hot water. Wild valuations. When these companies have come to market, a lot of cases, they're not making any money, like I just mentioned, yet they're fetching billions and billions of dollars of high valuations and first day market pops before what we have seen them cooling down recently. And then last but not least, limited disclosures and a lot of fluff. I mean, there's no S1 here. There's no in-depth prospectus. These companies are being dumped on the heads of investors with some flashy, cool infographics put together by 25-year-olds on investor relations websites that were just built 2 days ago. And there's not a lot of disclosure on what these companies are doing. So I think that's why the SEC is snooping around. And Julie, you mentioned the stock price reactions. I have 3 names in particular I'm watching. Lordstown, stock opened up at $19.32 when it debuted on October 26th. It's now an $11 stock. You had Hims. Stock debuted January 21st, opened at $17.08. It's now 13 and change. And then Ava, a LiDAR company, opened just on March 15th at $13.80. It's just now over $12. So you're seeing the market finally starting to scrutinize these SPAC companies for their lack of cash flow, their lack of profits, and potentially now the SEC knocking on all their doors.
Yeah, and also I've been looking at the various, where we've been showing them the various Chamath Palihapitiya SPACs, right? Some of them have made deals, some of them have not, but he's sort of the poster child, if you will, for these because he has done so many of them. They had to go to F in the alphabet to get to all of the SPACs he's come out with, IPOF. And we have seen a lot of them coming down recently after, some strong debuts because people sort of have been following what he's been doing. So we'll see what happens going on from here and if there is indeed going to be some regulatory action.